know a lot of people say, well, different asset classes, different strategies, and different strategies for this and for that. But at the end of the day, what everybody is in search of are low-risk, consistent profits. And so whatever asset class we're talking about, whatever time frame we're talking about, short-term day traders, longer-term investors, I would argue that it's the same basic rules and principles that you need to apply. And it really comes down to market timing. Identifying market turning points in advance with a very high degree of accuracy. Again, another thing the industry says, the average person can't do. While the industry's doing it. But so, it comes down to a basic set of rules that allows you to quantify real supply and demand in the market, because that's where prices turn in any market, whether we're talking about stocks, futures, Forex, options. It's going to be the same basic strategy. I had a question the other day from someone saying, when a big news event comes out, a big number comes out, should I pull my orders from the market? Should I pull my limit orders from the market? And my answer was, as long as you've got your orders in the right area, these levels that we're talking about, I would say no. Think of any big news event. Think of Japan. Think of any big news event you could possibly think of. And these are all bad news events. The British Petroleum mess. When they bombed the subways in London years ago. Each time a bad news event like that comes out, what happens is the markets initially drop big because everybody, the masses out there hear that news and they push the sell button. What happens is that drives prices down to levels where demand exceeds supply, right? Down to demand levels. And as soon as that happens, prices hit that level, and that's why you see such strong rallies. Every big news event you could think of, the initial move was down, but the big, ferocious move was up. And you think, well, how can that happen? Well, it's because you have no more sellers left at a price level where willing demand exceeds willing supply. And again, that's very quantifiable if you look at all this through the real world way of doing it versus, the book version.